Hey everyone, today is Monday, March 22nd, and the market had a pretty good / neutral day. The Dow was up 103 points. The S&P was up 27 points, and the Nasdaq was up 162 points. So in this video, I'm going to talk about where I think the stock market is headed, whether we're going to go higher, sideways, down, and whether the interest rates or the dollar will put more pressure on the stock market. Before we continue this video, please read this disclaimer. You can pause this video to read it. Okay, so today in the stock market, let's zoom in and see exactly what happened minute by minute. So this is a 30-minute chart. The market opened gap up today from last weekend. We had a pretty steady increase, but right in the last hour, of course, we were rejected by the 100 moving average and just basically faded today's gain, which is not really out of the ordinary. This usually is pretty common. Just people taking profits, and something like that happened last Friday, where we had a gap down, but we had this really strong rise. But of course, the last hour, there's always a lot more volatility in the last hour, right? The first hour and the last hour always has a lot of volatility. A lot of traders coming in, taking profits. Yeah, so it's not out of the usual. So going back to the one-day chart, overall the stock market is looking very strong. You know, we've had a excellent recovery from the coronavirus crash last March, and since we've been pretty steady, we've had some volatility late last year, but since the beginning of this year, it's been pretty stable. You know, just the usual up down, which is basically what you want to see, right? You don't want to see the market going straight up too quickly or going down too quickly. Just give and take, right? And as long as we find support along this 50 daily moving average, I think that, see, we're bouncing straight off there. It just looks very steady, as if it can continue on higher. And that's exactly what we want to see. No sudden movements up or down. Now, recently, in the past couple weeks, really all this month, we've seen a huge surge in interest rates and strength in the dollar, and that has been putting a lot of downward pressure on the markets. As you can see, this big jump up in the dollar of around 3%, and we're starting to pull back now, which is putting a lot less pressure on the market and allowing it to move up more. Of course, the rates has also been rising. Here's the 2-year rates, and it's much more dramatic in the 10 and the 30-year rates, and that has been putting a lot of pressure on the stock market, especially on the tech stocks. So we look at the Qs or the Nasdaq 100. You can see this whole month, or really starting late last month, the Nasdaq and tech stocks in general has just seen a lot of pressure on the downside because people want to rotate from tech stocks into value stocks if those interest rates are going higher. And but overall, we're starting to see these stocks recover. So in the last 2 weeks, as people are rotated, we've seen the Dow really just rip higher. But now we're starting to see people just buying tech stocks now because it seems like the whole movement down the last couple weeks has just been oversold. So we're seeing more stability in the tech stocks, which is good for the overall market. S&P looking very stable, which is what we also want to see. So let's check out some of the indicator and also news. So we can look at the fear and the greed. Right now is neutral, which to me, I feel like gives it more fuel, more potential for us to go up at this point, right? Because over the last couple, late last year, we saw this huge rally after the presidential election, and we saw the fear and the greed, just very greedy, just high greed. And that just made me a little nervous because that's usually when things are a little bit overbought, but we want to see things as stable as possible because we want the bull market to go up as stable as possible, right? There's a saying that the market takes the stairs up or the escalators up, but the elevator down, meaning that the market tends to grind higher slowly, aka the wall of worry, right? Whereas the market, when it crashes, it tends to come down pretty hard, like we did late last March. And so we're just slowly grinding higher, whatever negative news, we just, like interest rate news, putting pressure on the market, we want to just climb those wall of worries, just slowly climbing higher. And that's what we want to see in the market overall, right? No sudden moves up, just a nice steady climb higher. And we're starting to see the volatility finally come down a bit. We basically been above this gap for about a year now, and I think that finally we're starting to come down and slowly fill this gap after being sideways for the last couple of months. And I do suspect that, or I do believe that by the end of this year we'll fill this gap and the VIX will be a lot lower, and that's just going to give more fuel to the stocks to go higher. Same thing, UVXY, which is what it's an ETF that you can trade the VIX on, also going lower, 52-week low, which is a good sign that the stock market will likely have more fuel to go higher. Yeah, so let's check out some of the news. Of course, we have this headline today: overstimulated, stocks soar 75% in historic 12-month run. So I'm starting to see a lot of these articles where it's talking about, people are saying, oh, is this market too high? Are we too overvalued? But you have to understand that we just had a historic crash, right? Just last year, we had what we call a Six Sigma event, which is a once every 10-year event. This is extremely rare. The last time we had something like this was like the financial crisis. Let me look at that was a SPY chart, by the way, but I want to look at the S&P chart, just so we have a clean chart to look at. The last time we had such an event was the financial crisis, where the market lost over 50%. Now, the coronavirus crash, that wasn't as bad. This was down like nearly 40%, which it was the fastest crash in history, but also the fastest recovery. No time in the history of the stock market have we ever had a V recovery of this magnitude and of this speed, right? So this recovery, in my opinion, is not as bad as people say it is. It's not like this market is suddenly going to crash again. I think that this was this thing overcorrected, basically, and now we're just moving back up to where we should have been had we not had the coronavirus pandemic, right? This is where we would have been if we just continued higher, right? Let's look at, so this was just talking more about what we discussed earlier about bonds. In the past have really been putting pressures on the stock market, but recently the bonds have been pulling back a little bit, especially the 2-year bond. So that's been putting less pressure on the tech stocks, and now people are starting to scoop up cheaper, undervalued tech stocks, and we're starting to see the NASDAQ recover, putting in the bottom just perfectly off the 100 simple moving average daily. And really, if you look, it does seem like we're putting in an inverse head and shoulders right here. And if that is confirmed, we should see the NASDAQ go higher. And the NASDAQ usually leads the markets, right? So the NASDAQ goes up, generally a lot of other stocks, because a lot of tech stocks are in the S&P, and that should bring everything up again. So let's look at a longer time viewpoint, right? Let's get the monthly chart. Monthly chart. So the funny thing is, like last year, everybody was talking about how this stock market was in a bear market, right? And then it's like, oh, we're finally in a bear market now. The 10-year bull market is over, right? And now the market just basically just crushed those headlines, and we're back into this. So we're in a secular bull market, right? We were never in a bear market. I mean, technically, based on like traditional definition of a bear market, we were in a bear market, but I mean, if you look at the longer term chart, right, we're in a secular bull market that started in March of 2009, when the stock market bottomed from the financial crisis. And since then, the Federal Reserve has basically been printing a lot of money, flooding the financial system with liquidity, and helping us just press and keeping interest rates down and just pushing the market higher and higher. And the Federal Reserve just said last week that they plan on keeping interest rates low until 2023. So I expect the market to continue grinding higher until at least 2023, right? Until they start to raise interest rates again. However, I don't expect that to happen anytime soon. The reason is that we're still trying to recover from this pandemic, right? The Federal Reserve, this government is not going to put any unnecessary pressure on the recovery of this economy. So I suspect that, two things are going to happen. They're going to keep printing more money. We just approved a $1.9 trillion stimulus, so we're adding much more money into the economy. And now now that the economy is opening up again, the velocity of money is going to start increasing again. So we're going to see way more inflation, and I think that people are going to see that the value of the dollar is just going to keep going down. And then we're going to see asset price inflation as people, they don't want to hold dollars anymore. They want to put that into assets like stocks, cryptocurrencies, real estate, anything that is pegged to the dollar that will go up while the dollar is going down. And I suspect that that's where we're headed, the price. So I'm very bullish on the market right now. Monthly looking very strong. Weekly looking very strong too. As long as we continue to stay above these moving averages, and these averages are positioned in the bullish stance, right? 50, 100, 200-day moving averages looking very strong, and on the monthly chart, right? So overall, I'm optimistic. I am bullish on this market, and I expect the market to continue to grind higher in the same way it has, right, in the last few weeks and really the last few months, right? We go up, pull back towards the moving averages, go up again, just give and take, up, down, right? And that's what we want to see. We don't want to see any sudden moves, right? Sudden increase like this or that, because that's just going to cause the VIX to rise as the experienced traders, just dump and push the market down on the inexperienced traders who are basically just rushing in and FOMOing into this market, pushing it higher. And what we want to see is stability. And as long as we find support on these moving averages, I suspect that we'll continue higher and higher. And really what I'm looking for now is a clean break above 400 for a SPY, or 4,000 for the S&P 500. And yeah, just continue higher. And I expect us to just continue making new records past or until the year end, and really for the next 2 years until 2023. And we'll see what the Fed's position on rates are at that time. Hopefully by the end of this year we'll get more vaccination. We'll get the majority of this country vaccinated, and yeah, the recovery hopefully will come a lot sooner than everybody expects, because everybody was just last year everybody was talking about how we're going to enter a depression, a recession, but things are looking like people right now it's spring break, so we're seeing a lot of people, they want to go out. It's not like people want to stay in. They want to go out. They want to go to the beach. People want to travel. They want to travel now. So I expect the economy to recover very well, very quickly. We just need to get these vaccines out quickly as possible, and I expect the market, yes, to continue grinding higher into the new year and for really the next 2 years. Anyways, thank you for watching this video. If you enjoyed this video, if you found this video informative, I would really appreciate it if you could like this video, leave a comment, and of course subscribe for updates. I'm going to try to put a video out every day. I'm going to try to put a video out for stocks, cryptocurrencies, and maybe gold or individual stocks by request or if I have time. And just want to say thank you for watching, and I appreciate your support. And that's it. Have a good day. Thank you.